Welcome back to Stock Talk. Today, we're jumping right in.
Yeah.
We've got the Berkshire Hathaway Q1 2025 portfolio filing hot off the press,
Right. The 13F. Always interesting.
Right. A $258.7 billion snapshot across 36 holdings.
Yeah.
So the mission for this deep dive
Let's do it.
is really figuring out what's the strategy here.
Yeah.
What are these key moves telling us about Buffett's thinking?
Exactly. It's a big portfolio.
And hey, if you find this useful, please do subscribe, share, like us, maybe drop a comment. We always appreciate hearing from you.
Absolutely. And this filing, it's fascinating. Gives us a real look at how one of the most watched investors is positioning all that capital right now.
Yeah, navigating today's market.
And with such, concentrated bets in some areas, even kind of minor adjustments can be pretty meaningful.
Okay, so let's dive in. The portfolio, $258.7 billion. Where's the bulk of it? What are those top 5 names really setting the tone?
Okay. Top 5 as of the end of Q1 2025. You've got Apple, still way out in front.
Still number 1.
Then American Express, Coca-Cola, Bank of America, and Chevron.
Right.
And yeah, together these make up a huge chunk of the whole thing. So any changes there, definitely worth looking at closely.
So Apple, giant holding, 25.76%. That's like $66.6 billion.
Wow. It's massive.
But the share count, 300 million, hasn't changed. Yet the portfolio percentage dipped a bit, down 2.36%. How does that work if they didn't sell any shares? What's going on there?
Yeah, that's a good point. It's kind of interesting, right? Holding the same number of shares, but the slice of the pie gets a little smaller.
So market movements.
It likely points to just, relative price performance. Maybe Apple didn't appreciate as much as some other things in the portfolio during Q1, or maybe other sectors just had stronger gains. So even if Apple did okay, its weight relative to everything else went down slightly. It just shows these percentages are always moving targets.
Gotcha. So similar story maybe for American Express. Number 2, 15.77%. That's $40.7 billion. Again, no change in the share count.
Right. 151.6 million shares held steady.
But the allocation also dipped, down about 1%. It's the same reasoning, perhaps. Other things just grew faster.
That seems like the most likely explanation, yeah. Down 1.07% in weight. Buffett's clearly still committed holding all those shares.
Sure.
But yeah, maybe financials or other parts of the portfolio just had a better quarter in terms of price action, slightly shifting those relative weights.
Okay, now for something that did change more noticeably, Coca-Cola, it's moved up. Now the third largest holding.
Yep, overtook Bank of America.
11.07% of the portfolio, $28.6 billion. Again, no change in shares, still $400 million.
Right.
But the portfolio percentage jumped up 1.75%. That feels like more than just, minor market noise. What's the read there?
Yeah, you're right to flag that one. A 1.75% increase in allocation with 0 shares bought. That strongly suggests Coca-Cola's stock price must have had a really good run in Q1. It could reflect maybe a flight to what are seen as, safer consumer staples, or just Buffett doubling down, well, not literally buying more, but his conviction showing through price appreciation in that core long-term holding, especially if the economic outlook feels a bit uncertain.
That makes a lot of sense. Yeah. Now, flipping that, Bank of America slipped down to 4th place. 10.19% of the portfolio, $26.3 billion value. But here's the key thing. They sold shares. Pretty big chunk, down 7.15%.
Yeah, that's significant. Reduced down to about 631.5 million shares.
And this isn't the first time, right? Didn't they trim BAC last quarter too?
Exactly. This is the second quarter in a row they've cut the position. If you add it up, it's roughly a 20% reduction over, 6 months.
Wow. So that feels very deliberate.
It really does signal a conscious strategic shift. It definitely makes you wonder about Buffett's view on the banking sector right now.
Yeah. What's the thinking? Worries about interest rates? Maybe, or just the broader economy's impact on banks.
Could be any of those, or maybe just seeing better opportunities elsewhere. It's a clear move to reduce that specific exposure, though.
Definitely one to keep an eye on. Okay, rounding out the top 5, Chevron, CVX.
Yep, energy play.
7.67% of the portfolio, $19.8 billion. Share count here is steady, 118.6 million shares, no change.
Great.
But like Coke, its portfolio percentage jumped quite a bit, up 1.24%. So strong performance driving that, more confidence in energy.
Precisely. That gain in portfolio weight without buying more shares points directly to Chevron's stock doing well in Q1.
Okay.
Yeah, and if it fits with the theme maybe of leaning into sectors that might hold up better, or perhaps just reflecting strong energy market fundamentals during that period.
And speaking of energy, if we look just outside the top five, Occidental Petroleum, OXY, that's sixth place now.
5.06% of the portfolio, about $13 billion.
And they actually bought more OXY shares, didn't they? Just
Oh,
a little bit, but still.
They did. A slight increase, 0.29%, up to nearly 265 million shares. And like you noted with Bank of America, this is also the second consecutive quarter they've added to Occidental.
So that really underlines the energy commitment, doesn't it?
Yeah.
Selling a major bank, buying more OXY, and Chevron's weight increasing through price.
It paints a pretty clear picture, yeah. A definite strengthening of conviction in the energy sector's prospects, it seems. Could be about oil prices, long-term supply, maybe something else. But the actions are consistent.
Interesting. And then beyond those top names, you still see, the usual suspects further down. Moody's is still there.
Yep. MCO.
Kraft Heinz, KHC, Chubb, the insurer.
DB, yeah.
And DaVita, DVA. Though I think they trimmed DaVita slightly, too.
That's right. A small reduction in DaVita shares as well. So not just banking seeing trims.
Right. But it shows that while the big bets at the top are, big, there's still diversification happening across different industries like financials, consumer goods, insurance, healthcare.
Exactly. It's not all concentrated in just 2 or 3 themes. These other significant holdings show a broader strategy is still in play. Even that slight DaVita trim might just be, fine-tuning within their healthcare view.
So let's try and pull this all together then. We've looked at the big movers, the buys, the sells, the shifts in weight. What are the main takeaways? What's the story these Q1 changes tell us about Buffett's overall investment thinking right now?
Okay, connecting the dots. I think a few key themes emerge. First, that shift at the top, Coke moving past Bank of America. That suggests maybe a preference for the perceived stability of consumer staples over financials currently.
Right. Defense over offense, maybe?
Could be part of it. Second, the Bank of America selling is pretty unambiguous. It clearly signals a more cautious stance on, or at least reduced allocation to, the banking sector.
For 2 quarters running now.
Third, the opposite is true for energy. The increased weight in Chevron through price, plus the active buying of more Occidental, that's a clear doubling down on energy.
Yeah, strengthened commitment there.
Fourth, you could argue there's a broader defensive tilt,
Right.
The strength in Coke, keeping Kraft Heinz steady. These are classic defensive plays.
Makes sense.
And finally, tech, specifically Apple. Still the dominant holding, no question. But that slight dip in relative portfolio weight, even without selling shares, it might suggest that while the conviction is there, maybe tech valuations or broader market rotations are slightly tempering its dominance within the overall portfolio composition compared to Q4.
So putting it all together, it kind of looks like a strategic shift towards, maybe a more defensive posture. Trimming banks, liking the stability of Coke, betting bigger on energy, while keeping that huge Apple position but seeing its relative weight ease back just a tiny bit.
That seems like a fair summary. It really gives you a sense of how Berkshire might be reading the current economic winds, doesn't it?
Yeah, it does.
Prioritizing resilience, perhaps, focusing on value in these big, established companies, maybe anticipating more volatility ahead or seeing different sectors driving growth compared to before.
So for you, the listener, taking this deep dive with us into Berkshire's Q1 2025 moves, hopefully it gives you some interesting things to think about. These strategic shifts, pulling back from banking, leaning more into energy and staples, they offer some real perspective.
Food for thought.
Definitely. And it kind of prompts a question for you to consider as you look at your own investments. Given these adjustments by one of the world's most watched investors, what sectors or even specific companies out there might seem particularly interesting or maybe carry more risk in the market environment we're in today?
Yeah. What opportunities or risks do you see now?
Exactly. Something to chew on. Thanks for joining us for this deep dive on Stock Doc.